Indian economic indicators are in the right shape, we are still worried with the numbers in West. So how it can affect the Indian markets?
If India really does become the manufacturing hub for the world, then probably we are getting more coupled with the global economy than really decoupled.
Hello investors, myself Akshat Garg, Senior Manager Choice Wealth. Welcome to the new episode of Fund Manager Interaction. Today I'm accompanied by Mr. Vishal Mishra, who is the fund manager at Canara Robeco Asset Management Company, currently managing Blue Chip, Value, Tech Saver and Infra. Welcome to the episode, sir.
Thank you so much.
Finally, Nifty is all-time high, and I'm not sure whether to be happy or worried. How do you see market in the short-term and long-term horizons?
Sure. So it's best to avoid the noise that comes with the markets and not really focus on the index numbers, whether it's at its all-time high or it is not. It is more important to focus on the investment process and trying to remain invested in equities. And that is the advice that I would give, irrespective of where the markets are. In our experience and in our as we have seen the markets, opportunities for investments and generating alpha come across time periods, during good times as well as during bad times. So yes, it gets a bit more difficult during times when the markets are at their all-time high, because valuations comfort is definitely not there. But I would still say that there are opportunities in the market which can be looked at.
Okay. Though Indian economic indicators are in the right shape, we are still worried with the numbers in West. So how it can affect the Indian markets and how long it will take the decouple theory to factor in?
Right. So in our opinion, the risks that are there in the near term for the equity markets are definitely emanating from the global economy. So we will definitely be watchful of that and be extremely cautious. But at the same time, the Indian economy is doing quite well. All three legs of the Indian economy, which is consumption, infrastructure investments, as well as real estate, in our opinion, is doing quite well. So Indian economy, the risks are much lower, but definitely the global risks due to a global slowdown probably is something that we cannot ignore. We don't quite believe in the decoupling theory, primarily because India still remains a part of the global economy, and if the global economy does slow down, India would have to face the brunt of that as well. But having said that, we are a much smaller part of the global trade as compared to other emerging economies like, say, a Taiwan or a Korea, or in fact even China for that matter. Right. So to that extent, definitely India is less, to some extent, more insulated from the global problems. But that's something that has to be something that we have to keep track of.
Okay, so I can assume that the decouple theory will take a long time, at least for now.
Absolutely. In fact, it might as well go the other way. If India really does become the manufacturing hub for the world, then probably we are getting more coupled with the global economy than really decoupled.
Perfect. One quick question. Large cap, mid cap, small cap. Where to underweight, where to overweight, and why?
So continuing on the first point that we said, across market capitalizations or across time periods, you do get opportunities which can generate alpha and which can contribute to portfolio returns. And that's the case with market capitalizations as well. As a house, we tend to look at portfolios being market agnostic. So it doesn't matter whether an idea is a mid cap, small cap, or a large cap. What matters to us is whether there is earnings growth, which is likely to happen at an accelerated pace. And if that is happening, then probably it's an opportunity for us to generate alpha, and that's what we focus on. But I do appreciate the fact that small caps look a little more expensive than what we would be comfortable with. But even in that space, we do see earnings momentum and we do see opportunities that are exciting.
Okay. What are the top sectors Canara Robeco as an AMC is bullish on?
Sure. Like we discussed, that the risks that are there in the markets are mostly emanating from the global economy. So we would like to avoid sectors which are exposed to the global economy, like metals and IT, and to the extent of also certain companies which are exposed to the global economy by way of exports or having businesses in outside of India. At the same time, we are more positive on companies or sectors which are more domestic focused.
Okay.
So sectors like healthcare, within healthcare, be it hospitals or domestic pharma companies, consumption is something we believe is a trend which is likely to continue for India. So there again, consumer durables as well as discretionary and to some extent even consumer staples is what we are excited about. Telecom is another sector that we are quite positive on, primarily because we are nearing the peak of the capex cycle, which was driven by the 5G investments. We are still a few years away from the next technology-led investments that the sector may require to do. So there could be a lot of free cash flow that could be generated from the next year onwards for a few years, which could looks interesting for us. Capital goods is another space that we are extremely positive on. Here again, the excitement is driven by geopolitical events which have led to ideas or opportunities which emanate from China plus one, and the government's policies like PLI has definitely also added to it. So that's another sector that is likely to do well. Manufacturing, we do believe, is a multi-year phenomenon, if not a decadal one. So that's again something that we are quite positive on.
Okay, so I believe post-COVID, there is a massive change in the spending habit of the consumers. So is it the reason that we are too bullish on the consumption section?
So what you noticed is that the upper strata was least impacted financially by COVID. And for that reason, the premium segment of consumption really did well during COVID and post-COVID as well. We believe that trend is likely to continue because the incomes remain strong in India. But at the same time, the lower strata took the most brunt of COVID in terms of impact on wealth as well as income. In our opinion, that is finally behind us, and probably the mass segment could also see a recovery. And there are some data points that are pointing to the fact that the mass segment is also doing well. So while post-COVID you just have the premium segment doing well, this time around we believe that the premium may continue to do well, but at the same time the mass segment could also recover.
Right. I understand Canara Robeco as an AMC is coming up with a new multi-cap NFO. So what is the USP of the fund and how it can create wealth for the investors?
Right. So in our opinion, multi-cap as a category is most suited for investors who want to participate in the broader market returns, which is having exposure to mid caps as well as small caps. At the same time, mitigate as much risk that comes from investing in mid and small caps by having that similar allocation to large caps, which in a way mitigates the risk. Through one fund. So if an investor is looking at risk-adjusted returns through one fund, probably multi-cap is the best category to look at. And in our opinion, our investment strategy is very much focused on that, which is risk-adjusted returns. We have two buckets: portfolio stabilizers, which is basically companies which are likely to report steady earnings growth, and at the same time protect the portfolio from downside risk when things go bad. So they will be basically providing stability to the portfolio and remove risk from the portfolio. And this risk we intend to redeploy to alpha generation, which will be the other bucket of portfolio construction for us, wherein the objective will be to optimize returns or maximize returns from the ideas that we generate in-house, and hence ensure that the risk-adjusted return objective of the investor from the broader markets are fulfilled or satisfied through our strategy.
Okay, so any specific themes you would follow in that NFO?
Not specifically themes, but a bottom-up approach of identifying companies that are likely to do well is the approach that we always follow, which we would continue in this fund as well.
Okay. Before I wind up, I would like to take one more perspective from you. Since you are managing one of the finest blue chip schemes in the country, so many market pundits believe that there is no room for alpha creation in large cap schemes. So how true it is?
So we have a different take on that. We believe that large caps, if you take the Nifty 50 or the BSE 30, all of them are going through different phases of their business cycle. Some are likely to report secular earnings growth. Some are likely to report probably some impact on their business because they are exposed to the global economy. So at every point of time, you will find opportunities within the large cap space also, which are likely to do well in the near future, as well as do badly in the near future. And as active fund managers doing the large cap scheme, it is our objective to identify such differentials between earnings growth, which if you are able to identify correctly and deploy money accordingly, probably can still generate returns. I have been a co-fund manager for this fund for the past 2 years, but if you look at its track record, which is of 5 years, it has it has been done by our head of equities, Mr. Sridatta, and you would notice that it has consistently generated returns or active returns over and above the benchmark, which in a way validates my point that across market cycles, across time periods, if you're able to identify companies within the large cap space also which are likely to do well, probably that can create opportunities for a fund manager to generate active returns. So we still do believe that large caps is an opportunity for alpha generation as well.
Okay, I agree with your point. I believe that currently we can generate the alpha, but after 10 to 15 years down the line, like in the US markets or any other developed market, I see that index funds are outperforming the active large cap funds. So after 10 years, 15 years down the line, can we see the same scenario in India? What do you think?
Probably not. But in my opinion, that's too long a period to take a call on and decide whether the active fund management may not have a role in the large cap space. As things stand, I can say that for the foreseeable future, definitely there will be alpha generating opportunities that will be there.
Perfect. It was such a valuable insight, sir, and our audience. Thank you, viewers, for tuning in.
Mutual fund investments are subject to market risks. Please read all scheme-related documents carefully before investing.